It was amazing to me how often those systems didn't make money, even though
Yeah.
when you look back, you see all these big winners and you think, wow, that's amazing, right? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, let's talk about this concept of prospect theory in trading and investing. And if people don't know what that is, it's the idea that a trader or investor is going to focus more on the profits as opposed to the potential losses when taking a trade or investment. So how have you seen that playing out?
That's really good. You know, actually, I was just thinking the biggest thing I've seen when I first started trading was when I would look at the charts through the filter of a new strategy. That's where it would come in, right? Because you would look at the charts before I was doing any sort of back testing with Forex Tester, before I ever found Forex Tester or whatever, or maybe it didn't exist. I don't know. I would look at something and I go, wow, that looks really good. And you would pick out all the perfect trades, right?
Yeah.
And so then I was smart enough to scroll back, okay, and then pull out a spreadsheet or a notebook, and I would take the trades like usually in a notebook by hand and see where they would, where I would go if I took all the signals, right?
Mm-hmm.
So it's sort of like a tedious back testing. And it was amazing to me how often those systems didn't make money, even though when you look back, you see all these big winners and you think, wow, that's amazing, right? So it's exactly what you're talking about, right? The other thing is what's called hyperbolic discounting, right? And that's this idea. So it definitely comes in back testing or when we're looking at sort of determining what sort of strategy you should use, right? But in hyperbolic discounting, that's when you're in a trade, okay? And if you're in a trade and you've actually got some profit, and yet there's the potential for even more profit if you hold and wait, right? Mm-hmm. And this always reminds me of the quote by Jesse Livermore that said, he said, any man can pick the bottom of the market or the top of the market and get in at exactly the right time, the perfect timing. But it's rare that someone can hold on to that position. And that's what really made my money. You got that? That's where I made my money, was by sitting tight. And so by holding on to his very best positions, that's how he made all of his money. And so with hyperbolic discounting, what you do is you go, well, I would rather have the $100 now and cash out this trade than to hold on to the trade with a possibility of $2,000. And so this sort of thing is what we see if you look at the data, and we can link up in the show notes here the data, the 43 million Forex trades data, where they talk about how most traders, actually retail Forex traders, they actually win more often than they lose. They have a better than 50% win rate, but they take profits so quickly because of hyperbolic discounting, this idea that what you have right now is so much more valuable than what you could have. And you think about it, you could just move to break even, right? If you move to break even and you get stopped out, that's like a trade that never happened. But that's so painful for people to consider, that I could have had that $100. Why did I move to break even? I could have just taken that $100. Next time I'll take the $100. And that's what happens over and over again. That's why we see these traders. The standard retail trader has a better than 50% win rate on all the currency pairs, but it's that those losers are so much bigger than the winners, and that's the killer. And so, yeah, to me, though, that's the big one, right? Those are the two biggies. You fool yourself into trading something that's better than it is, and then once you are in a trade and it's a winner, you fool yourself into thinking it's better to take profit because you can't go broke taking a profit, right? That's what they always say. Yeah. Can't go broke. That's exactly how you go broke. So, yeah.
I think it's interesting to see, like back when you used to be able to go to trading conferences, you see everybody open their laptops, and the manifestation of this, I guess, is you can tell the beginning traders because they have a Ferrari on their desktop wallpaper. And then so they're really focused on those short-term gains, right? So I think that's and then you see those guys who've been trading for a while and they got something else on their desktop or whatever, and that's one clue that you can kind of tell the psychology of the person. So I thought that was interesting.
Yeah, that's really interesting. That's super interesting. I found that. Yeah, it's fascinating. So how do you think this relates to trading, the prospect theory idea? Like, what are your thoughts on that?
I think the prospect theory might be only half right. I think before you get into the trade, you're only most people are generally looking at the benefits, right? But I think once you're in the trade, I think the losses become more painful than not having the gains. So you might stay in the trade longer, and it might be more painful, but then that could get you to stop trading ultimately. So I think that there's two sides to that prospect theory.
And I think the pain, like the painfulness stuff, like that's kind of, you can almost see it on the charts, like in support and resistance, when you see like a support resistance level. So you can see where, like, let's say you have support and the price comes down to support, right? So there's traders that thought, okay, that's definitely support because it was support, back in the past.
Mm-hmm.
So it's going to be support again. So they buy there, but then it falls through that support. Okay. And then it comes back up and touches that support level from below. So now it's resistance. And that's where all the traders get out there, right?
Mm-hmm.
So then it falls again. Those traders that were long, they just want to get break even now. They're just like, oh, just come back to break even, please.
Yeah.
And it comes back to break even, and then they get out and then it falls. You know what I mean? It's so fascinating, like that you can see almost like the psychology on the line, like literally just on the line chart. Just looking at the line chart, you can see the psychology of the crowd and what they're doing,
Mm-hmm. Yeah, no, totally.
Yeah.
All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.